Alright, yes guys, welcome back to another YouTube video. Alright, in today's video, I'm going to be breaking down my favorite strategy, the ICT silver bullet. ICT himself said you can quit your job within 90 days using this specific strategy. Alright, so inside of this video, I'm going to be literally breaking down everything that you need to know from A to Z, including my A+ entry criteria, and we'll also go over a few live trading examples just so you guys can understand this strategy a little bit better. Yeah, other than that, let's jump straight into the video. Alright, so as you can see, I've drawn out two diagrams for you lot. This is a bearish example here, and we also have a bullish example. Okay, so first things first, what does the ICT silver bullet even consist of? So number one is a sweep of liquidity, right? It's going to either be buy side liquidity or sell side liquidity. Number two, you want to see a clear displacement. Okay, so what do I mean by that? You can imagine an elephant, for example, jumping into a swimming pool. All of the water is displacing out of that pool, okay? So that's exactly what you want to see on the charts. If we've just swept buy side liquidity, you want to see the next candle have a significant drop lower, creating a displacement. Number three, you want to see a market structure shift. So for example, if we have swept buy side liquidity and we get that displacement lower, the swing low that was created at buy side liquidity, you want to see a displacement breaking through and below that swing low, creating a market structure shift. So as you can see, this little light bulb here, this is our swing low example. Price comes back up and then it displaces through and breaks below that swing low. Okay, that is a market structure shift. Number four is a very obvious entry model. All right, many of you that already watch my channel and are aware of ICT concepts already know this concept, but it's simply a fair value gap. A fair value gap will appear after creating a displacement and also a market structure shift. You will then have your entry at the edge of that fair value gap. Have your stop loss above a swing high if you're going short. If you're risking a little bit too much, then keep your stop loss just above that displacement candle's high, which is the second candle in this scenario. All right, and the last step, finally, you just want to target the opposing liquidity. So if we've swept buy side, we've displaced, we've had our market structure shift, we've had our fair value gap, and we've entered, what is the opposing liquidity? It's going to be sell side liquidity down here. So this is a bearish example. For a bullish example, obviously it will be completely different. We'll just swept sell side, displaced higher, breaking above a swing high, as you can see in this scenario here, creating displacement. A fair value gap is then formed. You enter off that fair value gap and target the opposing liquidity, which in this scenario is going to be buy side liquidity, right? It's a bullish example. All right, and this is a really big thing with the ICT silver bullet. Make sure you're trading between the times of 10 a.m. to 11 a.m. New York time, okay? Make sure your settings on TradingView is set to New York time, okay? Otherwise, these concepts will not work. Okay, also, I've decided to add my full A+ entry criteria list. So you can use the bullet points that I have explained inside of this video to trade this strategy. But what you can also do is be very picky and only trade the A+ setups. So what even is an A+ setup? Okay, an A+ setup will consist of, number one, a sweep of session liquidity instead of any liquidity. All right, so what do I mean by that? Session liquidity is, let's say for example, we sweep Asia highs or Asia lows, London highs, London lows. These liquidity areas will be much more significant compared to any other liquidity. All right, so if you go into, for example, let's say Asia session and London session and try find key liquidity areas to mark out, if price comes up and sweeps these areas, that's going to be 10 times more significant compared to just sweeping any buy side or sell side liquidity levels. All right, so the next few steps, they're pretty much the same. So displacement, market structure shift, fair value gap for entry. Make sure your stop loss is above a swing high in order for it to be an A+ setup, because you can have your stop loss above a displacement candle's high, however, you risk getting stopped out. In some cases, I know you're risking way too much with the swing high, hence you have to put your stop at that candle displacement high. But again, A+ setup is going to give you that risk reward and allow you to put your stop at that swing high. Okay, this one is very important. Make sure your entry is inside of the 9:45 to 10:15 macro. All right, if it's not inside of this 30-minute interval or window, it's not going to be an A+ setup, and in my opinion is not a silver bullet trade. Okay, if you watch the 2022 ICT mentorship, ICT does briefly mention, okay, if you pay attention, to have your entry inside of this window. It has slightly changed over the years. Okay, we're in 2025 now. He released that mentorship 3 years ago, and back then it was 9:50 to 10:10. So to be more specific and accurate, most of the trades when backtesting now actually happen at 9:45 to 10:15. So this is the window that I recommend you should be using. Okay, and instead of just targeting any liquidity, all right, you want to target opposing liquidity such as relatively equal lows, relatively equal highs, that's going to be way higher probability than just targeting any buy side or sell side level. All right, and also again, we come back to session liquidity. So if you target London lows, Asia highs, etc., liquidity that happened in previous sessions, that is going to be 10 times more high probability. All right, and lastly, you're going to exit all your positions before 11 a.m. Okay, so that's pretty much everything that you need to know when it comes to this silver bullet strategy. I've given you a bearish example, I've given you a bullish example, I've given you all of the criteria, A+ and normal, that you need to know in order to succeed with this strategy. The only thing left to do here now is to go over a few trading examples, explain it a little bit more on the charts so you guys can actually understand how this works and have a better understanding. And then once you finish this video, guys, I highly advise you go into the charts and try to find some examples of this happening. Okay, go ahead and backtest. Go into the live markets, of course, using a demo account. I don't want you guys to be risking live funds. Make sure you have around 3 months of consistency on a demo account before you transition into a live account or prop firm. Again, that's totally up to you what you do with your funds. I'm not going to be advising you on this video here to be putting live money into the charts. That is totally up to you what you do with your finances. But one thing I will tell you, I've personally used this strategy myself and I've received over 6 figures in payouts from prop firms alone. And I've also made a lot of money trading my live account using this exact strategy. So I will leave you with that. But now that we've covered literally everything that you need to know from A to Z, let's jump straight into the charts and show you a few examples. All right, so number one, we're waiting for that sweep of liquidity, which as you can see, we have clearly gotten. We've swept sales liquidity here. What are the next steps? The next steps is a displacement, all right, and a market structure shift. Let's see if we can get it. Boom. We've clearly displaced and we've clearly broken above some sort of swing high to create that market structure shift. Usually after we create that market structure shift and displacement, we will get some sort of fair value gap, all right? So as you can see here, it's very, very small, but if you pay attention, you can actually see there is a gap between the first candle's wick high and the third candle's wick low. So that is still a valid entry point, which we're going to be entering from. So I'm going to take my long position from here. My stop loss, in this case, I like to risk anywhere from 25 to 30 handles max. So since I'm risking around 30 handles, if I put my stop below the first candle's low, that is exactly what I'm going to be doing, okay? In some cases, if the displacement candle's low allows me to risk 30 handles, then I will put it there. However, that is too tight of a stop loss, risking 12. So my stop will be going below this low here. If you are trading A+ setups only, make sure your stop loss is below a swing low. In this case, we're risking way too much. So we're not going to be putting our stops at the swing low. And then target some sort of buy side liquidity, either relatively equal highs or session liquidity like London highs, London lows. So in this case, I'm going to be targeting these relatively equal highs here, which if you actually measure 50% of the range, so from this high here to the swing low, this tends to be inside of a premium of the price range. So equal highs, which are above equilibrium and also in a premium, that is a very good target for me, and I'm going to be targeting that for 96 handles. So let's see how this trade will play out. Boom, TP smashed over 96 handles. Right, so that is the first example. Let's go over a bearish one. All right, so this is a bearish example. As you can see, we came up, we've swept relatively equal highs. We've created a swing low here, which is at buy side liquidity. We've displaced, creating a market structure shift, and we've also left a fair value gap behind, all right? So we're going to be taking that entry off the edge of the gap. Stop loss above the displacement candles high because we're risking 27 points. If you put your stop at the swing high, you're risking way too much. So your stop will be going there. Entry at the gap and then target some sort of session liquidity, equal lows, etc. In this case, we have a data low. So a data low is whenever news comes out. Since this is a 8:30 a.m. candle and it's a very large candle, it is going to be a news candle. All right, most news comes out at around 8:30 a.m. New York time, and you can use that as a price range. So mark out the news low and the news high. That could be a good area to target if you're trading that session. So as you can see here, we go short, target data low, and boom, TP gets smashed for over 130 handles. As you can also see, your entry, right, it was inside of that 9:45 to 10:15 macro. So you get an entry perfectly into that gap at 9:45, you enter short, and the trade is over within a few minutes by hitting your TP. So usually you're not really holding these trades up until 11 a.m. That is the maximum time you should be holding. So if you're still holding a position and it's 10:59 and it hits 11, just exit that position, okay? But usually you'll be holding the trade for around 10 minutes, 15 minutes max, unless the trade is a really big trade and it's going in your favor, targeting, for example, that session liquidity, then that way you will be holding that trade for a long period of time. But most of the cases, you're only in that trade for a few minutes. Yeah, guys, I hope you enjoyed this video. If you are really serious about getting your trading to the next level, okay, make sure to check out the links in the description. I go live literally every single morning at 9:30 a.m. New York time, and I take trades exactly like these ones on live stream. If you're looking for something more personal and one-on-one, where I actually coach you personally and I guide you literally every step of the way and getting you from being unprofitable to consistently profitable within the space of 3 months, that is my guarantee and promise, then just fill out the application. Link is in the description. See if you qualify and you're the right fit for it. If you are, then we can proceed and get started ASAP. But yeah, other than that, guys, I hope you lot enjoyed this video. Leave a like, comment, share, and subscribe, and I'll see you lot in the next one. Take it easy.